Yo, what's up, investors? Today I wanted to reveal to you my brand new Moo portfolio. And before I tell you all about it, I wanted to tell you why I made this. So, of course, I have my Robinhood and my Weeble portfolio, but this portfolio in particular, once I buy a stock, I can never sell it for the rest of time because I find myself almost trading stocks like here and there. Of course, I have my long term holdings like extra space storage, but these are stocks that I'm gonna buy and then never sell them. I went and did some deep analysis on all these stocks, and I'll show you later. DocuSign is a steal. Ticker symbol DOCU. DocuSign is a steal right now, and I'm gonna go into the financials later. But yeah, this is my brand new Moo portfolio, and like I said, once I buy a stock, it's locked in. Unless it gets bought out or something, or it goes bankrupt, which these stocks will never go bankrupt. Hey, not financial advice, but yeah, hope you'll subscribe along for the journey. I'm going to do updates on this portfolio all the time. But once I buy a stock, like I said, I am never selling it. It's locked in, and we're just going to see how it does because I find the most portfolios with the most returns are ones that are people that have bought stocks and then just forgot about them. Never looked at them again. And that's kind of what I want this portfolio to be. It's almost like a time capsule too, like in a year, so I can come back and be like, "Oh, I remember a year ago I bought all these stocks." Like, yeah, so I'm gonna add on to these positions and just buy new stocks if I want to in the future. But yeah, I'm gonna show you why I picked these stocks to start with. So first, I'm gonna start with DocuSign. Okay, I'm gonna show you the financials of this one right here. So yeah, look at DocuSign stock, man. This thing has fallen off a cliff, it looks like, but the financials look great, which I'm about to show you. But right now it's at $41. If we look at the past, this thing used to be like $300. So I'm gonna show you the numbers right now. So here's the free cash flow per share. It's up from 1 year ago, and in the past 3 quarters, look how good it's been. It's been very consistent. And this is a tech stock. So if we go to their net income, in the past 3 quarters, they're finally profitable. They're finally making money. So this is really good news. They just made the most amount of money they ever did. Well, 7.4 million, but I'm going to show you why. So look at the assets versus liabilities ratio too. I like to look at so much. So their assets has gone up and their debt has gone down. So their leverage ratio went down 10% in 1 year. So that's nuts already. Operating cash flow is best it's been in a long time. So I mainly now wanted to show you, remember the market cap of $8.3 billion? They have cash and equivalents of $1.02 billion. So look at the cash position. They've never had this much cash. So literally 1/8 of their market cap is just in cash. And if we go to their total debt, like look at this. Their cash easily covers their total debt, which I love to see in companies. $725 million of total debt with cash and equivalents of $1 billion. So you love to see it. And they're actually buying back their own stock. I love to see this. It's only $29 million in the most recent quarter, but that's great. They're not issuing any shares. And I think they'll continue to buy back some more shares. And it's really good when they're buying back their own shares at this discounted price. Like I could see this going back to like 50, $100, $200 plus one day if everything goes right. Remember, not financial advice, but yeah, that's the first stock I chose. Now I'm going to show you another one inside the portfolio that I'm holding. So here are my Moo holdings. These are other stocks I want to eventually add. Ticker symbol CP I want to add. And I also want to add Enphase and Powell. But yeah, we just looked at Bill. Now I want to show you ticker symbol PERI. I love this stock right here. They are a advertising growth stock. They're in the advertising sector, but let me show you their numbers. So cash flow per share of $1. Now that's the best it's ever been. So you love to see that. They're EBITDA positive, net income up from 1 year ago. They have no debt, I like to call it. Their total liabilities are only 29%, and their assets have grown from 711 million to 903. But let me show you this. So remember, the market cap was less than $1 billion. Remember, and they have cash and equivalents of $185 million. So 18% of their market cap. A lot of people don't know that. You got to go look at how much cash they have on hand and compare it to the market cap because the stocks could be substantially undervalued. So $185 million of cash. If we go to their total debt, which I like to check, they don't owe any debt. That's what I mean. The liabilities isn't debt. They don't have any debt, which I love to see. And if we go to their total common shares outstanding, it's only up 5.89% from 1 year ago. So they haven't been diluting you. only 5.89%. It's not that much, and that's normal for a tech stock. So they're actually making so much money now that they could start doing some stock buybacks or something like that if they wanted to. All right, guys. So for the next stock that I owned, it was ticker symbol Bill or Bill Holdings. Now the market cap is $11.93 billion, and look at this. So their stock price is kind of at a good deal right now. It used to be $340. So let me show you this. So the market cap is $12 billion. We'll call it. They're actually making free cash flow per share, even though they're net income negative. They're getting really close to net income positive, but they are still making a lot of free cash flow. Look at this. 75 cents in the most recent quarter. It's never been this good in a long time. So that's real returns. To show you the actual numbers, it's $80 million in the most recent quarter, up 867% year over year. But yeah, they've been beating the earnings. So look, total debt of $1.84 billion, and they have cash and equivalents of $1.62 billion. So they could almost pay all of it off if they needed to. And if we go to their actual total common shares outstanding, so in the most recent quarter, since they've been making so much money, they bought back $60 million worth of shares. So if we do go to their total common shares outstanding, it still is up from 1 year ago, but it is down from 1 quarter ago because they have been buying back shares, which I love to see. 'Cause look, they've been making so much cash because let me show you their gross margin. So here we are back on the Moomoo app. Remember, if you want to get this app, if you don't have it already, I like having multiple portfolios. It would help me out if you use my affiliate code. I'll leave it linked in the description. But look at the gross margin. Bill has a gross margin of 82%. Obviously, that's not net margin, but gross margin of 82%, up 5% year over year. So they're getting more and more profitable. That's why they made so much free cash flow in the most recent quarter. So yeah, that's why I chose Bill. I feel comfortable holding this one. I guess forever because I said I wouldn't sell any of these stocks. So yeah. The last stock I actually wanted to show you was ticker symbol CART or Instacart. Now, I talked about this one the other day. So Instacart just IPO'd, and I thought they were at a very good deal down at this $23 level. So look, market cap of under $7 billion. The first number I'll show you, besides the three most recent quarters, because they haven't been out, they just went public, so that's why there's not that many numbers. But look, they are positive. They are net income positive, as you can see. But more importantly, remember the market cap of just under $7 billion, and they have cash and equivalents right now of $1.84 billion. So that's like almost 20% of the whole market cap. So here we are on the Moomoo app. I love their key indicators feature. So it gives you some of the most popular key indicators. Like, so here's gross margin. We already looked at that. Operating margin, as we can see, they're getting way more profitable. EBITDA margin, it's going up. Net margin. So all of these expenses and ratios, I love seeing its return on equity, return on assets. There's not that many numbers, but from what I can see, ROIC of 57%. This one's a buy, in my opinion. I think they're at a good deal. If you just compare the cash on hand, they're making $200 million of free cash flow a quarter. Not guaranteed forever, but if they just stayed the same, that would be crazy. So yeah, let me know your thoughts on this one or any of the stocks on this list. If you would, I really would appreciate if you'd hit the like button and leave a comment down below on your thoughts on this portfolio. Subscribe because I'm going to start doing portfolio updates of this all the time when I buy stocks, and I never sell. I can't sell, like I said, so I'm only buying stocks on this portfolio. So yeah, hope you guys have a great rest of your day.